If somebody is looking at giving you $50,000 and they want a board seat, no way. An investor who's bad-mouthing another founder. I've actually had this happen, and you do not want that. So there should be mutual respect between you and your investors. Board control, liquidity preferences. I mean, you can get really easily screwed out of your company if you're not careful. Okay, welcome back. You know you have a busy day when you turn on your camera and see that your shirt is inside out. I'm sitting here laughing at myself. Anyway, today we are going to talk about red flags in investor deals. Super important topic, right? I feel like there's been a lot of content on this popping up lately on how, people talk about how getting the funding is the win. Like the whole goal is to get funding. The whole goal is to get funding. And then you check that box and you're like, okay, I did it. But the reality is, again, that is like just the tip of the iceberg. There's so much more to it. And getting the funding is only good if you've got terms that are going to not like screw you over completely, right? In the end, which happens a lot, unfortunately. So that's what we're going to talk about today. We're going to talk about some red flags. I think even going back as far as just red flags in conversations with investors. And something that I think is so important that I have, continue to try to get good at is listening to my gut. And I think we all could do that better, right? I don't know, there's something just in society today. I think the way we are all multitasking and we're so busy, it's hard to just get quiet and you feel like a feeling, but you just kind of push past it and ignore it. And I think that happens so much in the fundraising process, especially if you need something like funding. It's so easy to overlook or look past certain things that could be red flags or that could be, a real issue potentially, and just be like, oh, whatever, it'll be fine. No big deal. Who cares? I need the money. But that is really a bad idea. So I will say, I definitely have experienced this a few times. And even in my current business company, I have gotten really good at now not working with clients where I can spot red flags like, out of the gate. And it's like, no, not worth it. Not going down that path. So I think it's something you can get better at, but there are some really obvious ones in the early stage of talking to investors. And then we'll talk a little bit about like kind of listening to your gut and, how to do that. Okay. So red flags in terms of initial investor conversation. So if we step back, when you're talking to an investor, you're pitching your company, but ultimately they are evaluating you. They are deciding if you are somebody they feel like they can work with, that they want to work with, and you should be equally looking at them the same way because you are getting into bed with this person and you are going to be having a relationship, a working relationship with them, most likely for an extended period of time. So it really is so much more than just getting the money. You want to evaluate who they are. And of course, you're not going to go into like hardcore interview mode, but there are some subtle things that you want to just look out for and try to pick up on, and, try to catch in those early conversations. And you definitely can ask questions. And we'll go into what some of those questions are and how to ask them in a way that feels, respectful and appropriate. But I think here's a few red flags in initial conversations with investors. And these are, again, from my perspective, but if someone is talking about themselves like the whole time, and they're not really asking questions about you or your company or trying to learn, and they're just kind of talking about themselves the whole time, to me, that's a red flag. It's like you need someone who's interested in you, interested in your company, wants to learn about it. If they're more interested in just kind of like touting their experience and who they are and what they've done, I don't know, kind of a red flag. Probably not going to be the best fit. The other big one is that they want more control than they should have for small checks, right? So if somebody is looking at giving you $50,000 and they want a board seat, no way. I think you gotta, now, again, depends on how much you're raising total, what your current board structure is, all that stuff. There's a lot of variables, but giving somebody control or board seats, you need to make sure the amount of funding or the contribution on their side is equal to that. So if somebody starts off and they're like, well, yeah, but I would want, such and such control, and they're talking small dollar amounts, it's like, no, sorry, not going to work. And again, this is why a lot of that stuff, it's good to have thought through ahead of time and laid out in your deck or already available for you to speak to so that they're not kind of just coming out with what those things are. But sometimes you can still have that laid out and they're going to say that. And in your head, you should just go, yeah, this is kind of a red flag. Probably not a good idea. I think another one that's less obvious is if someone is flaking on you or kind of ghosting you a couple times. If they basically are, interested and they want to go to the next step and then they don't show up, or, who knows what happens. That is unprofessional, right? Even for people who are busy, if there's an appointment on their calendar, they should take it seriously and be there. That happens to everybody once in a while, but if it happens more than once or they're coming across as flaky, probably not a good thing. You want investors who are going to take their investment seriously, just like you're taking your company seriously. So again, it depends on what relationship that investor is going to have. If they're just like throwing in money and they have zero say and they're just completely silent, maybe, but just keep an eye out for that. You're looking for professionalism on their side, just like they're looking for it on your side. Okay, another one, this one happens all the time. The investor, or this happens a lot of times with like early stage VCs or angel groups, and they say, oh my gosh, we love it. This is so great. Come back later. And they're not giving you any clear feedback. That is just a total red flag and super annoying. And I would just like forget it and move on. It happens. And I think it's just kind of there's truth to it. I don't think they're lying, but it's also being nice, but it kind of is a weird way of stringing you along. So yeah, forget it. Maybe keep them on a spreadsheet and go back to them in a couple of years. But I wouldn't give that too much attention, going forward. You wouldn't want to like keep trying to convince them or asking them for more feedback. Just let it go. Okay. Another one is an investor who's bad mouthing another founder. I've actually had this happen, and you do not want that, right? Because if it's someone who's going to be like that, who knows? There's no way you're going to be perfect and do everything perfectly. So if you hear an investor bad mouthing another entrepreneur, chances are, again, it's like a toxic friend who's gossiping about someone else. Chances are you're going to be the source of that at some point in the future. So that's another red flag I've come across. And the last one to me that is most important, and, I don't know, maybe being female, this was a little bit more of a thing, but I think it definitely happens to guys too. If you are having conversations and you feel like they are, just being condescending, kind of just trying to put you in your place of like, you're the, I have everything, I know everything, and you need me. Just this more like I'm more powerful and speaking in a condescending way, huge red flag. So there should be mutual respect between you and your investors, right? So if you sense that they're being condescending, that is, especially in the early stage, guess what? When you run into shit down the road and things are getting rough, that is probably not going to be, those are not going to be fun conversations to have. So you want to partner with people where there's mutual respect. Yes, you don't have all the experience they have. That's fine, but they should respect who you are, what you bring to the table, and that your company and your idea are interesting to them. That should be enough for them to speak to you respectfully and to maintain respect. So I think that's a huge one. I think it happens really often with investors kind of being, more or less condescending. And that to me is a huge red flag. So definitely look out for that one. Okay, so I think all that to say, let's just kind of summarize what you are looking for in an investor. You want somebody, I think, who inspires you, that you're inspired by. You want somebody who's going to be mutually respectful to you. You want someone who's going to also have a level of professionalism that you respect. And you want someone who's realistic about their investment and what that brings. And I think a lot of times that's an experienced investor is much better than someone who's never done angel investing before. This is their first time making an angel investment. They're probably more likely to be asking for, more control than they deserve for the size of the check that they're writing. Or I don't know. So anyway, I think someone that you respect, someone that's professional, someone that is realistic, has previous experience investing, angel investing, and is just really going to be a solid thought partner for you and contribute financially to growing your company. Okay, so let's talk about real quick questions that you can ask investors to gauge whether they're the right fit or not, okay? And I think it is totally okay to do this, and you should do it. I think, again, sometimes we feel like we're in these meetings and it's them asking all the questions and we're just waiting for a yes or a no or whatever. And it is good to ask questions because ideally you want more than money. You want them to bring more to the table, and it's totally fair and appropriate to ask questions. So some of those are like, what's a previous investment that you've made, an angel investment that was, worked out really well, and why? See what they say. They might just say, oh my gosh, it was so much fun. We grew, and you'll learn a lot. You'll know if the fun part to them was the growth and the strategizing and the problem solving, or was the fun part strictly the financial exit, right? So you can gain some insight there. And I think it's a good question to ask. Another one to ask is kind of what kind of support do you typically offer entrepreneurs? I think that's a fair question. And they might say, oh, I'm just available for a board meeting, once a month, or, oh, you're welcome, to call me or text me anytime you're in a jam. You can get a lot of insight and that's a great way to ask that. Just what kind of support, do you typically offer your portfolio companies or your, angel investments for the entrepreneurs, the angel investments that you've made? Okay, this is a big one, understanding expectations. So what does a win look like? I think, again, that goes back to that first question a little bit, but it's okay to say, what does success look like for you in this partnership? And of course, they want to make their money back. They want to make a return, but you might get some insight as to if there's other things that they would consider it a success. How do you think about follow-on funding? So a lot of times when you go to raise that next round, the best source is from your current investors. And the investor might say, yeah, I typically participate in, follow-on rounds, or no, I strictly do an initial investment and that's it. So it's just kind of good to have some insight there. And then the last one is what's your timeline to your ideal path to getting your return to liquidity? So if they say I definitely want to return within 2 years, depending on where you're at, what your company is, might not be a good fit. If they say, yeah, I'm realistic, I know things sometimes take a while, but of course I'd love to get a return within 5 years. So again, you'll get some really good insight there. And I think it's really important, to ask those questions. Okay, let's talk about listening to your gut when choosing an investor. So again, I think we're all busy and it can be really tough to do this. And listening to your gut is really just acknowledging how you're feeling, at least for me. So when you leave an investor meeting, if you feel energized and good, that's probably a good sign. If you feel like drained and kind of unsure of yourself and not great, that's probably not a good fit. So again, you're going to be working with this person, most likely, depending on kind of what they're, what you're raising. Again, all these variables, but most likely if it's a lead investor or someone, making a big enough investment, you're going to be working with them and you want to leave those conversations energized. So again, back to that, like if they're condescending and make you feel like crap and question your whole life purpose, don't work with them. Bad idea. So how do you feel after that meeting? It's just such a simple indicator. And just pause for a minute and go, do I feel good or do I feel after that meeting? If you feel good, if you feel energized, if you feel inspired, probably a great option. If you don't, might want to just move on and look to the next one. Another way to listen to your gut, I think, again, this is like, kind of obvious, but just sleeping on it. Really reflect on it the following day is take a moment, because again, it can be really easy, this happens, to just wake up the next day, go, I got to email them this, I got to blah, 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 and just push it forward. But you might want to just take a moment and go, how was that meeting yesterday? Were there any red flags? Is that somebody I really want to partner with? Yes or no? And then, go on your day and do what you got to do. But I think just sleeping on it and reflecting the next day, taking literally 1 minute to do that can be so helpful. Were there any red flags? How did I feel after that meeting? Is this someone I want to partner with? That can be super, super helpful. So those are kind of like my top tips for the initial, investor conversations and how to look for red flags, how to recognize red flags, what some of those red flags are. Now, then you get into we're actually structuring the deal and negotiating terms. And again, I say this all the time, but a safe or convertible note is going to be your best bet if you have not raised money yet, because you don't have to get into a lot of these terms that you're going to have to get into when you do a formal equity round. So, and because there are a lot of possibilities for things to be structured not in your favor and more investor friendly when you do that equity round. And you have to be super, super careful. And those are like much more serious red flags that you need to look for. Board control, liquidity preferences. I mean, you can get really easily screwed out of your company if you're not careful. So for those red flags, you want to sit down, you want to take the terms that an investor is proposing, and you want to sit down with your attorney. And what I like to do is I like to say what, and again, it's not to be negative, it's just to understand what the terms are. What is the worst case scenario for me, given how this is structured? What's the worst case scenario for my team, given how this is structured? What's the worst case scenario for my investors, given how this is structured? And peel back the layers with your attorney, because a lot of times they're not going to tell you, well, here's the worst case scenario in, these types of situations. They're putting together the paperwork, but you do need to proactively ask them what the red flags are. Also ask some advisors who've been through this before, if they can give any feedback on what the terms are, because you go through all this work to finally raise the money and you don't want to have terms that are just completely unfavorable to you. So my best advice for red flags when it comes to structuring the actual equity paperwork, which again, avoid that in that first round if you can by using a safe or convertible note format. And I've got episodes on that if you want to understand what that is better. But you really need to just dig through it with your attorney and understand what the liquidation preferences are, what the different types of stock mean, what the different rights are with the different types of stock, and make sure you understand that. Read it all, understand it, and don't feel like you have to sign. There is room to negotiate, and you always want to try to find something that is a win-win for you and a win-win for your investors. So it typically gets harder to do that when you are, working with VCs. So if you can go through angel investors, private investors, you might have a little bit more wiggle room to, structure it in a way that is entrepreneur friendly or fair, at least fair for both sides. With VCs, that can get tricky. A lot of times they're just calling the shots. So anyway, that's it. I hope that's helpful. Listen to your gut, ask questions, and go out there and charge it. Okay, we'll see you guys next time.